Welcome to the Commercial Know-How podcast, where mortgage brokers learn how to successfully launch, manage and grow a commercial finance business. I'm your host, Belinda Gibson. Join me as I draw on more than 25 years of property finance expertise to show you how to diversify beyond residential and build a growing business for all seasons. Don't forget to hit subscribe and visit commercialknowhow.com.au to download my free ebook to help you get started in commercial finance. Now, sit back and enjoy the episode. Today, we are talking about the first interview and a guide to a successful meeting. So, brokers, if you think about the client journey so far, for that first client, you have now completed your pre-appointment questionnaire, you've completed some background research, and you will have already prepared and learnt a bit about your client and their business. You will have made an appointment to meet with your client to discuss their financing needs. So this session is now about preparing the agenda for the meeting and 9 key topics and a handful of questions that you can ask that may be relevant to your client. My tip here is to prepare an agenda and print it out so your questions are ready to scroll through to ensure you've covered off everything before you leave. So let's jump into the guide to help you structure your first interview with some key questions you should consider asking. So number 1 is the business overview. Here we want your client to provide an overview of their business, including the industry, the products and services that they offer and their target market, how long they've been in operation, and what the company's legal structure is, how many staff they employ, and who their top 5 clients are. I recently met with a guy who was wanting to buy the commercial premises that his business had been leasing for the past 5 years. Now, I initially thought that the business was much older than that after doing some background research, but he had actually purchased the business and he'd been operating that for only 5 years. The previous owner had wanted to retire and he's seen an opportunity to buy the business from his previous boss, and he had been in a growth stage since then. When his landlord was looking to retire, he offered the premises to his tenant as a first right of refusal, and it was a good opportunity for my client to take on that property. Number 2 is the financing purpose. So what specific financing objectives do you have? Is your client looking to expand their business, purchase equipment, purchase inventory or stock, or do they have a cash flow gap? You may want to have a chat here about the desired loan amount, the total costs involved, and when the funds are required by. Is there a time consideration here? And what will the source of repayment be? So this might be income from the trading business, or it might be income coming from an existing lease on the commercial premises. So if we go back to my client that was looking to buy his commercial premises that he was leasing, he knew what the purchase price was. We could calculate the total costs involved for the stamp duty, the transfer of land, his application fees, and any other legal or accounting fees we had a little bit of a buffer for. And then we also had an allowance for a commercial valuation and his legal conveyancing fees. We knew there was a finance clause, and we also had a settlement date that was required. Now, there was some potential risks here around his finance clause date and settlement date that he had in mind, so we had a discussion around those dates and the timeline for the business application. Number 3 is the current financial situation. So can your client provide their last 2 years of financial statements and income tax returns? Can they provide the last 4 BAS statements as well? Here we want to also see that their BAS and their ATO payments have been made on time. Around that current financial situation, Also find out if your client has any existing loans or debts. Now, this includes equipment finance, and if they do, you will need to obtain the details of those. So this is the loan term, the loan amount, the interest rate, and the loan repayment terms. Also ask how business conditions are. So how is the business trading? Are they growing? Is it slow? Or is it seasonal? So seasonal can give you an idea around, are they really busy around certain times of the year? Do they have a lull over winter, for example? Number 4 is security. So what security will be used for the loan? And can your client provide details about a statement of position, including property, cash, equipment, stock, and inventory? And is your client comfortable in providing a personal guarantee to the lender or a charge over the business? So going back to my client again, so he was buying a commercial property in the southeastern suburbs of Melbourne, and that property he was buying was security for the loan. He was also looking to buy that in his self-managed super fund. It was a referral from his existing accountant. So we also had a lot of information about the business already. While there wasn't a personal guarantee, there was some other guarantees relating to his self-managed super fund. Now, number 5 is business projections. You will not need business projections for every single application, but depending on what your client situation is, you might. But some great questions to ask are, what are the expected growth plans for the next few years? And does the business have a business plan or a sales forecast budget outlining projections? So if you're thinking about a greenfield site, maybe your client is a new franchisee, they may have some business plans, some sales forecasts and budgets put in place because it is a brand new site. Another question is, what's the biggest opportunity for growth, or what are the areas of priority for your business? So it's a bit of a personal question that you may be asking to the CEO or the general manager of the business. They might have some actual plans around their own KPIs of where they want to land for that financial year. They might be looking to expand and grow their business into other suburbs around their existing catchment. Number 6 is credit history. You don't need to spend a lot of time here, but a good one is to ask is, have the directors ever been involved in a business that's faced bankruptcies, defaults, or legal issues relating to credit? And do they have clear personal credit as far as they are aware? If not, you can also do some sanction checks, a comprehensive credit report and things like that to have a bit of a deep dive into that background. Number 7 is financing preferences. So is your client looking for short-term or long-term financing? If they are buying a commercial premises, and typically clients will want the longest term available. Here we can draw a line in the sand and just say, well, if it's over $1 million, a 2 or 3 year term might be all that is available. It may be because we are looking at a lease stock transaction where the bank is wanting to line the loan up with the term of the lease, or we might be wanting a really competitive BBSI rate relating to the wholesale market, so the bank might come back to you with only a 2, 3 or a 4 or 5 year loan term, and that's okay. If they're on interest only, they'll continue to make interest only repayments. If it is principal and interest reducing, normally the repayments are aligned over a 15-year loan term rather than the loan term that's assigned for the debt for the initial period. If it's under $1 million, typically you can get a 25 or a 30-year loan term depending on the lender that you're discussing the loan with. Your client may also be interested in a specific type of business loan or a funding option. They might have some terms in their own mind as to how they want their finance provided to them as well. You also want to understand again what existing loans are in place and what terms do they have. Now, this is really important when we're coming back to that capacity to repay, particularly if they are wanting principal and interest reductions and they've got some existing loans in place that we need to consider. 8 is regulatory and compliance. So your client might not have any specific legal or regulatory requirements that their business needs to meet. However, ask the question anyway. If they are in the fuel industry, the lender may want to see a clean soil report about the environmental impact of that business. If their business is affected by changes to commodity prices or currency rates, you may want to have a discussion around there. So we normally see businesses impacted by commodity prices if it's farming, so it may be beef, wool, dairy, wheat. They may be a transport business where they are impacted by the fuel diesel prices. Or if it's manufacturing, importing or exporting, foreign exchange might have quite a heavy impact on your business. Number 9 is other considerations. So here is where you can ask your client for any other documents or information that's popped up during the course of your interview that may be relevant to your financing needs. If it is a divorce or matrimonial matter, you will need a binding financial agreement or at least know if one is being prepared. If it is a trust structure, you will need a copy of the trust deed. If they are creating a new special purpose entity for the purchase, you will also need to understand what that new structure is that's being created. If you have any questions or concerns regarding the application process or the lender's terms, this is a great question to ask your client. Do they have any questions or concerns regarding the application process or the lender's terms? Another great one to ask your client is, can they share any personal goals that they have for the business? And what insurances do they have in place? So do they have Keyman or do they just have business insurance? Also find out if they've got cyber insurance as well. So there you have it. I hope that this document will assist you in building rapport, understanding your client's business and their finance needs. It will help you to ask the right initial questions and guide your conversation with the client. The documents will need to be customized around their specific circumstances when you are preparing the agenda. And if you are aware that they're wanting something specific, then you tailor those questions around the property purchase, for example. Thank you again for listening to the Commercial Know-How podcast, and don't forget to visit commercialknowhow.com.au where you can download my free ebook to help you get started in commercial finance and how to get in touch with me. And please make sure you subscribe on your favorite podcast player so you don't miss an episode, and we will see you again soon. Thanks for listening to the Commercial Know-How podcast. Don't forget to visit commercialknowhow.com.au where you can get in touch with me or download my free ebook to help you get started in the commercial lending space. If you enjoy the show, please hit subscribe so you don't miss an episode. See you soon.